Is the future of finance tokenized?
I think the currency on my side will be whatever I choose, and the currency on your side will be whatever you choose.
The total tokenized market today is 116 billion US dollars. By 2030, we're talking about that going up to a bear case of 3.5 trillion US dollars.
I think we're at the beginning of kind of what the dot-com phase was for the internet with digital assets.
Today, deep dive into the concept of digital assets tokenization. Tokenization will revolutionize the way we fund, trade, and manage assets. Is the future of mine tokenized? Yes, I think probably is going to be. And we are going to hear more from what Mark Child, CEO of Condor Gold, has to say. I think Mark has got a fair point. So now you can do an IPO on a blockchain? Interesting. Let's see what Nick Scherling, CEO and founder of DeCryptoFi, has to say. We are going to find out more with our guest today. But before we get into the show, if you're not subscribed to our YouTube channel, click the subscribe button now and follow us on social media to stay up to date with our news and interviews. We create some really cool content. We try to get you informed, and obviously your support is super important for us. We want to keep bringing amazing guests to our show. Who do you want on the FinancialFox show? Who do you want Fox Steffi to interview? Let us know and reach out to me. Something very important. When it comes down to investment, there is always risk. And when we talk about crypto and tokens, the risk is even bigger. So do your own due diligence, do your own research. It's a market that is very volatile and is all down to you and what you choose to do with your money. Great to have you on the show. Would you like to maybe do a quick introduction, just a short introduction of yourself?
Sure. I'm Nick Scherling. I'm the CEO and founder of Decentralized Crypto Financial, and our company is trying to bring digital assets in compliance with the SEC and other federal regulations.
I'm Mark Child. I'm CEO of Condor Gold, Toronto and AIM-listed company. We have 2.4 million ounces of gold in Nicaragua. The project's fully permitted and construction ready, and we're looking at ways to finance that. And prior to that, I had 20 years in finance, fund management, and institutional stock broking.
Brilliant. Okay. Is the future of finance tokenized?
I believe it is. I think that just like everything else that's moved to the digital space, that's about transaction speed, it's about how quick you can do things, it's about automation, it's about programming things to take place when other events happen that are either foreseen or unforeseen or pre-programmed. And I think that digital assets, whether that be stocks, whether that be a security token, whether that be the points that my son earns in the video games he plays, I think that all of those things are moving into this tokenized space where they're all interoperable and they're going to be exchangeable on markets that have yet to be built, that we're in the building stages of now with the foundational elements.
It's going from a standing start to be a big portion of finance. It'll be part of the future. It'll probably be quite quickly, within 10 years, 10% of finance will be tokenized. But we shouldn't forget the rest of the market is still going to be there. Government debts, which will remain untokenized. So there'll be a massive part, I think at least 90% will be untokenized. But having said that, it's an enormous part that's going to happen. And it won't just be happening in terms of tokenized assets, it's going to happen into the back office part of finance. So the future of finance, where people are looking for cost savings and efficiency, both of those can be brought through with tokenization.
Great. Compliance in crypto finance. Nick, how does it work?
Yeah, compliance is tough, right? It's a lot of rigmarole around knowing your customer, knowing who the people are that are buying things. And that's something that a lot of the traditional crypto platforms don't have, but the exchanges have that functionality built in. So we're really doing compliance through exchanges, not through the medium underneath it that they're actually exchanging. Right? That's true today with traditional finance in terms of paper money, but that's not true in terms of how digital finance works in TradFi, where money is moved between banks between your credit cards, all those things have identity kind of built in them. That's something that we feel is missing today in the crypto space, and something that I think is needed for business adoption and widespread adoption for users and these digital assets to be placed into these kind of new markets. And that's where our company focuses.
Can you tell me a bit about your beta program that you announced, I think it was October, right?
Yes, absolutely. Yeah. So we just announced the beta program. We are looking for partners that want to go through kind of the manual process with us to walk their company through doing a public offering or an asset offering on our decentralized blockchain. So they'll inherit all the KYC and AML from us, but then be able to sell their assets direct to consumers and integrate those into their other business platforms as they may desire. And we're actually working with a couple companies right now who we're going through this process with, and we're in the process of taking their information and going to start working with the SEC to get them approval to qualify their stock to be listed. They're not listed, but operated on our blockchain.
Right, that's interesting. So that is an IPO using tokenization, right?
Yes, absolutely.
Okay, Mark, this is an interesting area, I guess, for you. What I would like to ask you, we had many conversation about tokenization in public markets and how that can work. But let's start maybe from the beginning, right? Why a company would tokenize their assets?
Well, I think it's particularly relevant for people in the natural resource space, be it gold producers, for example, or copper producers, or any form of base metal or precious metal. And you can readily see that those companies need loans for anything from working capital to construction capital, to trade, to just financing generally the operating business. And I see at the moment a source of that at the moment, as you know, either it's coming from equity or it's debt or bonds and so forth. And I think in future there'll be a massive market there for those underlying commodities to be tokenized. And the benefit for that is that market is going to be a global market. As long as you've got an internet connection, anybody could participate in a physical gold bond, for example. Say if you raised $100 million or $500 million of gold-related bonds, that could be applied from institutions and retail simultaneously, assuming you can get through the regulatory issues. And that will be secured against the underlying precious or base metals. So I think it'll be a much broader audience of people that can actually participate in the financing of companies going forward. So I think that's going to be very attractive.
What was your reaction when HSBC announced that it's going to be the first bank in the world to offer tokenized gold?
It's a great announcement from HSBC. Gold is, for the banks, is a very safe asset to go and tokenize. First of all, the biggest holder of gold in the world is the Federal Reserve. So they can't exactly shut that down. They've got 8,000 tons of gold. And so I think that gold is, as you know, a $13 trillion US currency. The biggest buyers of gold this year, the last 2 years, have actually been the central banks, and particularly China and Taiwan and Singapore in the last month. So it's around about 12% of the OECD countries' foreign exchange reserves are actually held in gold. So gold is an established currency for several, 2,000, 3,000 years. The problem is that actually of retail people and so forth and institutions actually, if they want to pay for something in gold, it's difficult because of the physical nature of gold. If I want to buy a coffee at Starbucks, I can't buy it in a bar of gold or an ounce of gold or a fraction of an ounce of gold. So I'm not at all surprised that gold is going to be one of the first assets to be tokenized. And you've seen Tether Gold and Pax, which between them have about $1 billion US of digital gold under their two tokens. What HSBC is doing is something different. They're using a distributed ledger technology. They're saying one token is equivalent to 0.001 troy ounce. It's for institutional investors only at this stage. They have their own platform called the Evolve platform, and that's going to make the trading of gold from an institutional perspective through them much better. And I think it's good they're leading the way. And it won't just be HSBC. You can be guaranteed that all the other major banks are going to follow suit on this. So expect a lot more of that, and it'll have to be 100% backed by physical gold. And of course, gold's got a limited supply. It only increases the supply, a bit like Bitcoin. It just increases 1% per annum out of the Earth's crust. So there's a finite supply of gold. People often forget that. You can't just dig it out. So HSBC is involved in digitalization. The first time they did any digitalization was actually soybean contracts in 2018. So they've actually been in the space for over 5 years. They're a bit of a leader. And they've also done bonds before. They did a JV with Wells Fargo back in about 2 years ago now. So I'm not surprised that they're one of the first people.
Nick, do you see also company involved in the natural resource space coming to your platform with the plan to tokenize, to do some kind of sort of tokenization, or is more, tech companies? How do you see this commodity digital asset space paving your side?
Sure. We're more focused on tech companies today, but I think natural resource companies are absolutely a viable candidate for our platform. I think it's more that they would want to sell their assets directly on our marketplace or through us as we kind of evolve into a marketplace, right? Where they're tying a legal contract for the gold that may be in the ground, maybe they haven't dug, whatever it might be, to a token that's on our platform that then can be sold and invested in by users. I think it'll be a little bit different than the banks doing their tokenization of gold. But I do question and wonder with the bank's tokenization of gold as to, does that replace a gold ETF? Does it augment one? Does it see the investment that a gold ETF does? Because I think the differentiator that I see between them, and really this is all assets, not gold, but any digital asset, is that as this marketplace across all of the industry expands, and we see the ability for me to take a credit card, right, that is linked to my several accounts in terms of assets, right? And I still think that credit card infrastructure will be there, but it'll be linked to my Bitcoin wallet, my gold wallet, my Ethereum wallet, my DeCryptoFi wallet, my whatever stock it might be wallet. And I'm able to go to a merchant, and that asset that I select is sold automatically for me in seconds as I use it to purchase things. And then they can take payment in the asset that they choose, whether that's currency, whether that's a different asset, a different stock, whatever it may be. And that transaction happens instantaneously, very, very quickly. I don't see that we'll see a new currency. Even Bitcoin, for example, I don't see will be the currency. I think the currency on my side will be whatever I choose, and the currency on your side will be whatever you choose. And that's the interesting paradigm we're going to see between these digital assets that we all start to buy and then exchange instantaneously for the assets that the other party wants. And that's going to be a very unique and very kind of cool environment to be in.
So it would be almost a semi-barter trade then.
Yes.
In layman's language, where somebody has an asset which is then digitalized, be it a commodity or precious metal, and someone else might want to, in return for that, receive a car or ships or something. So more of a trade.
Yeah, could be that, could be stock in a company, could be whatever. Now, each one of these things is going to have liquidity, which is one of the things I think we're going to discuss a little bit, in order for that to happen, right? Because there has to be liquidity in each market separately for that digital asset. But I think that's truly where we're going, is that it's going to be all these assets are available to be their own currency, and it's you selecting which assets you want your investment in. And that's where I almost think that will be a possibility, but that may not be the currency of choice for people. It may still be the currency is dollars, just so that we have kind of a normal medium for exchange, because all of these things need to be based in value off of something, right? So today you base gold off of dollars, you base silver off dollars, oils in dollars, right? Something, it has to be based off something for us to determine its value as we exchange it with one another, right? Stocks are based in dollars, at least in the US. Other countries, they're based in their currency. So there has to be that kind of exchange rate that takes place, and all these assets are not going to have individual exchange rates with one another. So there needs to be that bottom kind of exchange rate layer, I think, between the currencies that are fiat potentially, or maybe that's Bitcoin. I don't know, but everything will be priced in that, and then it'll be a matter of exchanging my assets that I like for the assets that you like, in addition to just currency itself.
It kind of like what we are saying, I still really the strong use case for commodity companies, for example, the one that have got assets like Condor Gold, for example, to actually tokenize their assets, and maybe the digital asset platform, the tokenization process become a new venue for a trade, or for, maybe a debt instrument, like you said, Mark. So giving these companies, businesses, an opportunity for financing, monetization, and maybe trade, a solid use case for that, because you have got commodity that has gone underlying in value, so the tokens is not going to made up of thin air, it will have an underlying value, and that way you add an extra layer of trade to a business that perhaps now is just restricted to raising equity based on the business model rather than the gold in the ground. And most of the company like Condor Gold, many analysts say, okay, it's undervalued, right? It's undervalued, but what about if we add a token layer, a token market, maybe this undervalue can be shifted to something else?
Yes, well, there's a couple of several things you touch on there, but there's a couple of points. If someone is looking to construct a new mine, then in the past, even in South Africa sort of 300 years ago, the investment banks in London would lend, say, $100 million, allow the construction to happen, of the mine, which might take 18 to 24 months, and then get repaid back in the physical gold. So, and that's because it's a currency, they're happy to do that. They actually get the physical, they can hedge that or so forth. That instrument can be perfectly well used in tokenized gold as well, where you have a collateral over the assets in the ground. The mine gets constructed over the 18 months period, and the repayment comes back in tokenized gold in this example, and that could be the future of mine finance. And that model you could repeat across every commodity, even from wheat and rice or so on. People could have it back tokenized if that's the way commodity goes. So is it likely to be? Is that going to be a use case in the future? Absolutely. And just in terms of, to come back to your point on the size of the market, what's the future? I'm reading something earlier that the total tokenized market today is $116 billion US. By 2030, and this is a number from Coinbase article I was reading, which isn't so far away. It was 7 years away. We're talking about that going up to a bear case of $3.5 trillion US, or a bull case of $10 billion US. I don't know if either of you seen that particular article, but it's exponential growth. It's still a small part of the overall financial market, if you like. But if you want to position yourself in something for the next 7 years, even if the median of that is correct, it's hypergrowth.
Yeah, I couldn't agree more, Mark. I think it's we're at the beginning of kind of what the .com phase was for the internet with digital assets. And I think to your point in tokenizing the assets in the ground, the question I have for you that I think where you're going with that is that it allows the retail investor to potentially fund those mines, not just the institutional investor, because the retail investor can buy micro, payments or write micro portions of that investment versus just the bank being able to do it.
That's right. And you can actually put on a 10% yield, for example. So gold doesn't yield anything at the moment. That's always a criticism about gold. Buy a US Treasury, a 10-year, and get 4.6% today, or a 5-year, whatever it is, 5% today. You could take on the mine construction, say you had a 2-year low, you could say, okay, I'm going to double that, I'm going to give you 10%. and that's obviously mining companies can do that. So I think that starts to become very attractive, and anybody can participate, including the retail. And back to your point about regulation, which I didn't comment on. If anyone's opened up an account at one of the major exchanges like Bitfinex, for example, going through that process is as difficult from a KYC perspective, anti-money laundering perspective, passports, where's the money coming from, as actually opening up an account as a UK stockbroking firm. In fact, it's more difficult, I found, in terms of number of questions I was asked. So the onus on regulation is to the exchanges, because the exchanges that get hit with a fine, for example, from the US, if that's the case. Bitfinex, in the case, as an exchange, makes a point of not actually taking US customers. So as I'm here in Miami at the moment and I log on, I actually have to say as I log on, please confirm that you are not a US citizen. So they're very clear. And then through that, I can actually, through the app, I can buy Bitcoin, which I've done, and I can buy Tether Gold. So I can buy digital gold, which I've done as well, just to understand how this works and be involved. But massive regulation at that level.
Nika, can you share how are you handling all the regulatory issue, KYC, AML? I know that you have got strong point on identity as well.
Absolutely. So our approach was to build it in at the underlying blockchain layer 1, rather than let the exchanges handle it. Because the way that we kind of looked at it is we said, okay, as an exchange, you can guarantee that your customers are KYC, but there is no proof of where the funds come from when they're transferred from outside the exchange, which is still a very active and plausible thing that they're all building into their infrastructures. They want you to be able to send things to other crypto addresses and receive things, right? And that's kind of where the KYC and the identity piece breaks. And that's also the worry that we saw for businesses that may tokenize their assets. Because if I tokenize my assets, even if I sell them through an exchange, if they can be sold or sent to anyone with a wallet address, I now potentially take on some liability for those assets being used in ways that I would not want them to be used. And even if it's not liability, I'm still, my brand is at stake if those assets are used in a way that I don't want. The last thing I want is Elizabeth Warren talking about how my company's assets were used to finance some terrorist action, right? Or traded on a black market for XYZ, right? And I think that the current system allows for that, regardless of how well the exchanges are set up. And that's why we fundamentally said, for business adoption to really take place, for this marketplace to really be where it needs to go from a business and to merge in TradFi, all those different things, we need the underlying layer of this market to be KYC compliant. And that way, just like the banking system, there are certain controls built in that are inherited, that are there all the time, right? And so that was the approach we took when we built our blockchain. And that's where the assets that we bring onto it inherit that KYC. They don't have to worry about it. They don't have to get it from anywhere. They could be listed on any exchange, whether it's decentralized or centralized, and the KYC is built in. It's still there, always there. It cannot be removed.
Yeah, it's kind of like an interesting feature because it can make really the platform scalable as you get more.
And then with that built in, the other thing it allowed us to do is to do digital contracts that are legal contracts, not just smart contracts. So as Mark kind of talked about tying a token to physical asset and then it having a yield, those legal contracts can be put into our smart contract and digitally signed by the issuer of that token, but also by the purchaser. So now they have a legally enforced contract that all happened at the same time as they bought the token, not as a separate thing that somebody sent me as a DocuSign and then I got my tokens, which would be something that I would, really never want to do because that would just be a whole complicated process.
So if we go back to the point about liquidity that Mark, you brought up in your last answer, there is obviously a challenge when we talk about crypto markets, especially, tokenization, and it's still a market that is not fully developed. So you have got times where it's very liquid and then you have got times where it isn't liquid. And then it's a struggle for this token holder to actually sell and it can become quite unhealthy. So Nick, what's your thought? What's your approach? How do you see liquidity being built in this market to become healthier and attract more investors rather than, become be kind of like a Wild West?
Yeah, I that's a tough question. I think regulation actually helps in that scenario. I think adoption by TradFi helps. I think this being integrated into the current systems we use and the current applications and banking and asset systems that we use helps, right? But it is it's a process. There's no quick fix to getting the liquidity there. It's a fast-moving train, as Mark pointed out. I mean, people are adopting this stuff hand over fist, and it's growing at a rate that we haven't seen, anything grow like this in years. But it still takes time. I think that's the first piece, and then I think it's probably some integration across all the marketplaces to where they're also more tightly integrated with each other to provide more liquidity than just one marketplace's liquidity, right? And I think that's something that like the stock market has, between the different listing platforms and different exchanges, and that same infrastructure has to get built out for the crypto community.
Mark, you think it's going to be a retail game to kind of get?
It is at the moment. I mean, crypto is almost completely retail at the moment. I mean, it's and I think for liquidity, if you want to get liquidity up, you've got to get the big guys in, and that means regulation and it means ETFs. Probably as a starter, because then you're going to have so-called professional fund managers running an ETF. That ETF could raise $1 billion. It could raise $10 billion. If you look at the ETF market in the States, it's hundreds of billions of US dollars. None of that is tokenized, and that's the opportunity for that. I think for liquidity to go, it has to move out of the retail, or it complements the retail by moving into ETF space, and for it to move into the ETF space means everybody has to be can buy it, including institutions putting the money with an ETF, which happens with the main ETFs. So I think that's going to be a absolute key, which is why there's so much excitement around the first ETFs being potentially coming for Bitcoin and so forth, because that would just be the tip of an iceberg, an absolute avalanche of money coming into the crypto space if ETFs get when that clearance comes through in the United States.
So I'm going to ask you a question, because you brought up the spot Bitcoin ETF that we are waiting for. How do you think that is going to impact the Bitcoin space? Is pricing, and then would people buy just the ETF rather than buying Bitcoin on Coinbase, for example?
I think so many Americans at the moment are probably not really buying Bitcoin because it's sort of regulatory concerns.
Custody is a big issue,
and custody, and they got their account with a stockbroker somewhere that can't buy it, and their compliance won't let them buy it, and so I think there's a lot of pent up demand there. In terms of the current run on Bitcoin, I can't call the market, but sometimes it's better to travel than to arrive, because obviously there's speculation pushing it up ahead of an anticipation that comes through. So a bit of that is already priced into the stock. But Bitcoin, you're mentioning Bitcoin, it's still very small. I say very small. I mean, Apple's market capitalization, one company, is $3 trillion US. Bitcoin's 600 billion. And yet the amount of press that Bitcoin gets is the same almost. So there's a massive following, but it's a global following, or global following for both. We both know both. But so can it grow a lot more? Yes, absolutely.
Nick, what's your feeling about this ETF?
Yeah, I think we're hopefully going to see one later this year that everybody's been very excited for. I think that's going to provide, as Mark said, a lot of liquidity to the market and be a big mover for us. And I think as a result, we're going to see Bitcoin price go up because of that and the halving.
Okay, thank you so much.
Well, thank you very much for inviting us on.
Yes.